Something strange is happening on Wall Street. Stocks are soaring, valuations are exploding, and every company, from tech giants to tiny startups, is suddenly rebranding itself with one magic word: AI. Sound familiar? It should. Because this is exactly how every major market bubble begins. The last time investors saw this level of hype was during the dot-com era of the late 90s, when anything with a dot-com in its name doubled overnight. Today, just swap .com for AI. The question everyone's asking, but no one wants to answer, is simple. Is this innovation, or is this insanity? Let's look at what's really happening. Over the past 18 months, the US stock market has been completely dominated by artificial intelligence. NVIDIA became a trillion-dollar company almost overnight. Microsoft, Google, and Amazon have added hundreds of billions in market value simply by talking about AI. Even companies that have nothing to do with AI are adding AI to their investor presentations, and their stock prices jump the next day, and that's the red flag. Because when markets start rewarding narratives instead of numbers, bubbles form. Now, to be clear, AI is real, it's powerful, it's transformative. But so was the internet in the 1990s, and that didn't stop the dot-com crash. Back then, investors believed every online company would change the world, and some did: Amazon, Google, eBay, but thousands more disappeared. The same pattern is emerging now. AI promises to revolutionize industries, from healthcare to logistics to finance, but the problem isn't the technology, it's the expectations. Right now, investors are pricing AI like it's going to deliver immediate, unlimited profits. The reality is that most companies are still in the experimental phase, spending billions on hardware, power, and data with little return so far. In fact, analysts estimate that nearly 70% of AI startups have no path to profitability yet. Many are burning through cash at alarming rates just to keep up with competition, but Wall Street doesn't care, not yet. Because this is how hype cycles work. They start with breakthrough innovation, then excitement, then overinvestment, and finally, reality. The first two stages build legends, the last two burst bubbles. Let's look at history. In the early 2000s, fiber optic companies like Global Crossing raised billions to build internet infrastructure. Their idea was visionary: faster connectivity for a new digital world. But they expanded too fast, too soon. When the demand didn't match the hype, the entire sector collapsed. AI could face a similar test. Right now, the infrastructure boom is massive. Data centers, GPU factories, and energy grids are being pushed to their limits. The US power demand from AI servers alone is projected to triple by 2030. But if consumer adoption or enterprise ROI doesn't keep up, that spending spree could turn into oversupply, and that's when bubbles burst. Not because the idea was wrong, but because the timing was. Still, there's another layer to this story, and it's what makes this bubble more dangerous than the last. This time, it's not just startups driving speculation, it's the giants. NVIDIA, Microsoft, Apple, Meta, Amazon, these aren't penny stocks. They're trillion-dollar companies. So when their valuations balloon based on AI projections, the entire market moves with them. That means if AI optimism cools, even slightly, it won't just be a tech crash, it'll be a market-wide shock. But here's the twist: AI also is driving real productivity. Goldman Sachs estimates AI could add up to $7 trillion to the global economy over the next decade. That's huge, but it's also spread over 10 years. Investors, on the other hand, are pricing it like it's happening this quarter. That disconnect between what AI will deliver and what Wall Street expects it to deliver is what defines a bubble. Even insiders are sounding cautious. Elon Musk called AI the most powerful technology humanity has ever created, and also the most overhyped. OpenAI's own CEO, Sam Altman, said, "Many companies are AI washing," claiming to use AI for things that have nothing to do with it. And JP Morgan analysts recently warned investors that AI mania has become the new crypto, a magnet for easy money chasing hard dreams. So, are we heading for a crash? Maybe not a full collapse, but a correction seems almost inevitable. When AI adoption slows or early returns disappoint, markets will reset expectations. The weak players will disappear. The strong ones will survive and thrive. Just like after the dot-com bust when the internet didn't die, it matured. And that might be exactly what AI needs. Because under all the noise, there's something real happening. AI is already reshaping manufacturing, logistics, and healthcare. It's improving code efficiency, forecasting demand, and unlocking creativity. The technology itself is not a bubble. The hype around it is. So the real winners won't be the ones chasing quick profits. They'll be the ones building sustainable ecosystems. Companies that use AI to solve real problems, not just impress investors. Think of it like this. In every gold rush, there are two kinds of winners: the miners and the ones selling the shovels. In AI, those shovel sellers are companies providing infrastructure, chips, data storage, and cloud computing. That's why NVIDIA, Amazon Web Services, and Microsoft's Azure are at the center of it all. They're not gambling on applications, they're building the foundation everyone else needs. But even foundations can be overvalued, and when too much capital floods one sector, history always repeats itself. So where does that leave us? In one of the most exciting and risky moments in business history. AI is changing everything, but that doesn't mean every company claiming to use it will survive. Investors are about to learn, once again, that innovation doesn't equal profit, and hype doesn't equal growth. The AI revolution is real, but revolutions always have casualties. And when the dust settles, the companies that remain won't be the loudest. They'll be the ones that quietly built the future while everyone else chased the illusion of instant success. Because in the end, the question isn't whether there's an AI bubble. The real question is, who will still be standing when it bursts?